Good afternoon, ladies and gentlemen, and welcome to the TELIT Communication full-year results for the period ending 31st of December 2020 investor presentation, and apologies for our very short delay. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it is appropriate to do so. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if I could draw your attention to that to address it, that would be most appreciated. I'd now like to hand over to Paolo Del Pino, CEO, and Eyal Schafer, CFO from TELIT Communications. Good afternoon to you both.
Thank you.
Thank you.
Good afternoon. So this is Paolo Del Pino, CEO of TELIT, and I want to welcome you to our 2020 annual results call. Thank you for joining us. Today on the call with me, as we just said, there is Eyal Schafer, our CFO, and we will take you through our results presentation, and then we will be very happy to go through a Q&A session on our financial and business performance. At this stage, I'd like to point out that we will be unable to provide any additional information beyond the RNS statement made last week regarding debate advisors. This is due to the regulatory restrictions in place. Any further updates on this matter will be announced when appropriate. I will just say that the group remains confident in its prospect. It is well capitalized and has a strong position in a growing market segment, as you will hear today. Moving on to our results, I'm pleased to report that once again we successfully improved our financial results, profitability, and cash generation, thanks to our refocused strategy as well as the decisive actions taken by the management timely at the start of the pandemic. We were very disciplined. Following the successful business transformation carried out in recent years, TELIT is now fully focused on driving continued industrial IoT market growth, delivering strong revenue and financial performance in line with the expectation. We are, in fact, well focused to maintain our leading position and to increase products and service differentiation, thanks to continued investment in key areas as 5G. We are mindful of the short-term risks that might affect us as a result of the ongoing COVID-19 situation and continue to take actions as necessary to minimize the impact on our workforce, as well as operational and financial performance going forward. We continue to follow all guidance from relevant authorities to ensure our employees worldwide are safe. As you know, the global semiconductor industry is in a constrained supply situation, and we are constantly monitoring customer demand to minimize the impact from potential component shortages. But looking beyond the short-term impacts, we are confident that the pandemic will accelerate the adoption of IoT solutions, mainly due to the increased need to manage assets remotely, especially when it comes to mission-critical businesses. This will create medium to long-term benefits to us. Now let's go to the 2020 highlights. Looking first at some of our key operational highlights for 2020, we made, I'd say, further progress in executing our industrial IoT focused strategy. Our award-winning, innovative, one-edge integrated hardware and services IoT solution is a key component of this strategy, which is serving to strengthen the synergy between the IoT product business and the cloud and connectivity business. We like to talk about double play, triple play, and triple play is the name of our One Edge product. With the recently announced addition of our new IoT as a service subscription plans for connectivity and TELIT One Edge, our customers are now able to launch IoT application quickly and cost effectively. From a business perspective, this allows our customers to transform more of their IoT investment spend, made up of modules, software, services, and network connectivity, into an operating expense. Our continued investment in extensive global 5G certification for our gigabit LTE and 5G data cards has been another key highlight, with our 5G data card tested and designed in by several major operators across multiple geographies and diverse market segments. Our high category LTE business continues to excel and grow above market, setting us up nicely for major designs wins on 5G. Our IoT connectivity business continued to grow with improved profitability in 2020, highlighting both demand for dedicated IoT connectivity services and the scalability of this business. We are happy to say that we successfully finished a user trial for our core network and are in advanced rollout for our connectivity solution. This enables us to offer IoT connectivity solution for global and large-scale deployments and better monetize our eSIM solution. Our performance in 2020, together with our 5G, One Edge, and cloud and connectivity business offerings, gives the management and the board confidence that TELIT will perform and deliver growth in line with expectations. We are proud that in such a difficult year, we were able to increase our EBITDA. I'd like now to hand over to Eyal, who will take you through the financials in detail, and then, of course, we'll take back the floor for the conclusions and for the Q&A together with the team.
Thank you, Paolo, and good afternoon, everyone. I will now walk you through the financial results for the full year. Let's start with revenues, where the key highlight was our cloud and connectivity segment. These revenues increased strongly, up 7.3%, which was very encouraging in the wider economic context, highlighting both the growing demand for dedicated IoT connectivity services and the scalability of the business. Overall revenues were reflective of the impact of COVID-19 on customer demand, particularly on hardware revenues. Group revenues were down by 10.2% year-over-year when removing the 2 months of 2019, which included the automotive division. When we look at our revenues by geographical markets, we see the following trends. In the Americas, revenues remained stable over the last year with 194 million. This remains our biggest region, thanks to the resilient overall demand for LTE, driven by the additional certifications of our Cat1 and Cat-M1 products. Based on the solid fundamentals of the market, we're confident that TELIT is well positioned. In EMEA, revenues were down by 13% to 99.4 million. This region was most affected by the knocked-on impact of lower demand for our customers' products due to the COVID-19 pandemic. While the region has been slower to adopt new cellular technology, we're seeing encouraging early signs of low-category LTE deployment ramping up, which will benefit our products. In APAC, revenues were down by 32.6% to 50.2 million, due primarily to the slower than expected deployment of a large project. We expect this project to pick up in 2021. Moving to gross profit, where our gross margin improved to 35.4% from 32.9%. The better than expected improvement versus 2019 was due to the higher share of IoT services revenues, which mitigated the decrease of IoT product revenues. Looking ahead, we expect LTE product margins to stabilize and cloud and connectivity revenues to maintain their growth trajectory. Adjusted EBITDA improved by 2.4 million to 40.6 million, despite lower overall revenues. This was thanks to improved gross margins from higher service revenues and the cost optimization program initiated during Q1 2020, which allowed us to protect our stakeholders and maintain our strategic and financial targets. Moving to profit in cash, just to remind you of TELIT's definition for profit in cash. This is the adjusted EBITDA minus R&D capitalization, minus CapEx, and a reversal of lease costs. This is essentially the impact of IFRS 16. During 2020, profit in cash improved significantly to 16 million, driven by better adjusted EBITDA and management's continued capital expenditure discipline as the company maintained the profitability trajectory seen in the past 2 years. Moving to R&D expenses next. Despite the decrease in overall R&D expenditure, the company's capitalization level shows the company's continued focus on future developments, mainly related to 4G and 5G products. Gross R&D expenses were 46.3 million, or 13.5% of revenues. The decrease in gross R&D was primarily thanks to the strategic optimization of our R&D teams, which was completed in 2019. In addition, a few projects moved from H2 to beginning of 2021, demonstrating TELIT's agility in the face of current market conditions. Cash OpEx decreased by 12.7 million to 101.4 million, supported by the cost optimization efforts implemented in 2019, as well as our tactical response to the current market situation. Selling and marketing expenses were 45.3 million, or 9% of revenues. The decrease reflects the cost control implemented by management and the natural saving in the marketing and travel expenses as a result of restrictions and the cancellation of major trade events. General and administrative expenses were 19.5 million, or 5.6% of revenues. The decrease was mainly related to less professional fees and travel expenses. Moving now to net cash and cash flow analysis. We are pleased with our performance in 2020, which demonstrates our growing focus on cash generation. As you can see, the company has a strong balance of net cash and is maintaining its cash position. The net cash position increased to 63.8 million compared to 48.2 million in December 2019. The improvement is mainly from the positive cash flow from operating activities offset by cash flow from investment activities. The cash balance remains strong at 101.2 million, with an increase of 24.5% versus December 2019. Borrowing increased by 4.4 million to 38.1 million as of the end of 2020. The increase is mainly related to a new loan from an Italian bank to support working capital, offset by the repayment of government loans and the early repayment of a $2 million mortgage loan related to our facility in Italy. Cash flow generated by operating activities before movements in working capital was 42.6 million, up from 34.6 million in 2019, reflecting improved financial performance. Operating cash flow, including working capital movements, was 41.6 million, up from 14 million in 2019. This reflects both an increase in profit for the year, excluding profits from the disposal of the automotive business in 2019, as well as an increase in the working capital movement, mainly related to better receivables. This also includes increased receivables from Titan. Cash flow used in investing activities was 20.3 million, related mainly to CapEx and the capitalization of R&D costs. This should be compared to 22.9 million in 2019, which is the figure excluding the positive cash flow from the sale of the automotive business. Cash flow used in financing activities in 2020 was 2.9 million, related mainly to long-term borrowings and lease liabilities, whilst receiving proceeds from short-term and long-term borrowings. In 2019, the cash flow used in financing activities was 39.6 million, which reflects the full repayment of all bank facilities following the sale of the automotive business. To finish on our financial position at the end of 2020, our balance sheet remains strong, providing confidence in this uncertain market environment. The main changes in the balance sheet related to a decrease in both current assets and current liabilities. During 2020, the decrease in current assets derived mainly from improved collection from Titan and reduced inventory levels at the end of 2020. The decrease in the current liabilities related mainly to a decrease in the trade payable due to lower revenue that affect our products purchasing, and other current liabilities of mainly employee expenses related and royalties. That's all from me. I will now hand it over to Paolo for a few closing remarks.
Thank you, Eyal. Yes, I'd like to summarize briefly before moving to Q&A. So once again, we successfully improved operational results, profitability, and cash generation, thanks to our refocused strategy, as well as the targeted program of efficiencies that were taken early in 2020 in response to COVID-19. The significant improvement in our overall gross margin, supported by growing IoT cloud and connectivity service revenues, is particularly encouraging. Following the successful business transformation carried out in recent years, TELIT is now focused on the growing and dynamic market for industrial IoT, and we are well positioned to maintain and grow our leading position in the market by increasing the differentiation of our product and services through targeted investment in key areas like 5G and bundled services. We are, of course, mindful of short-term risks that might affect us as a result of the ongoing impact of the COVID-19, but we are confident that the acceleration and adoption of IoT solutions triggered by the pandemic itself will create medium-term benefits for the IoT market. So we expect a ramp up of customer demand into 2021. In view of this and seeing the fruits of our team's hard work, all TELIT management, the board is confident in the group's prospects for the future and is committed to delivering value and growth. Thank you all. We are now ready for the Q&A.
Paolo, thank you, and to Eyal also for the update and the presentation. Ladies and gentlemen, please could I ask you to continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted during the meeting itself, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. You'll receive an email notification when that's ready for you to review. I would also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be automatically redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. And I think that will be very good if you could allocate some time to do so. In the meantime, Paolo, I know I haven't given you a lot of time to review those questions that have been submitted by investors. If I could ask you to click on the Q&A tab on your screen, could I ask you to read out the question, perhaps who they're from, and give a response, and then I'll pick you up at the bottom when we get to the end.
Sure, I will read, and the first question is, how do you see growth moving forward? Would you say mainly through organic efforts or through mergers and acquisitions? Paolo, would you like to take this question?
Absolutely. Look, of course, as you know, since 2 years, we are only focused on organic growth. We were focused on transforming the business and in being able to increase margins and open new business opportunities. Today, if we look at what we have done, and if we look at our financial position, we are in a different stage of our path for growth, and we are also open to any kind of deal that could create value. Of course, we think that there could be interesting acquisitions in certain segments if the price were good, and I think of the connectivity, IoT connectivity segment. But we are also sure that the market will go through consolidation, and therefore there will be opportunities there. TELIT would like to be playing the consolidation game because we are in a position with our operational results and with our cash position to be a strong player in the market. I then see a question from Thierry, who says, why is your cloud and connectivity business significantly underperforming the market? Even the telecom operators have done better according to Analysys Mason, with a growth of 8.2% of their IoT connectivity revenues. Well, Thierry, in reality, this number is the average of the connectivity and the platform. If we look at the pure IoT connectivity business, we are well above the 8.2% that you are mentioning here, while the platform last year suffered because we made a selection of certain clients based on margins, and we decided on our own to reduce our portfolio, and therefore impacting the year, because we thought that we had certain clients that were not significant for our margins. Therefore, we cleaned the base. But if we look at only the IoT connectivity business, we are far above the 8.2%. Simon again asked, can you expand a little about the competitive pressure you are seeing in the market? Look, 2020 was a very hard and difficult year because I think all the players in the market were struggling to find revenues, while from what we see in recent months, the situation now is totally different. But we are facing supply chain constraints. We position ourselves, most of our business is from 4G upwards, and we are pushing very much our bundling solutions. We are trying to offer services together with our modules and to avoid the competition on the low-end technology modules, where we are basically now not even, let's say, if you look at 2G, 3G in the US, basically this market is not there anymore. There is still some in Europe where we suffer overall in these segments, the competition from certain Chinese players. But all in all, I would say that we are proud to say that when we meet our competitor in trying to conquer new clients, we play well. TELIT is a strong competitor. Ben is asking net cash position where all the outstanding money is due from to either automotive sales proceeds and or working capital adjustment relating to the transaction received before 31st December. The transaction was paid, all of it. We only had the net working capital because of our agreement for the whole 2020 we were buying components for them. We are now at very low level of exposure, and I hand over to Eyal, who will give you exact figures.
Yeah, thank you, Paolo. At the end of December 2019, we were open on trade receivable level of 24 million. We were able during this year to decrease this to a level of $7.3 million, and we continue to decrease that. The TSA ended on 31 December 2020, but we still have some manufacturing that we need to complete for them, but it's minor compared to the exposure we had during 2020.
Thank you very much. Thank you very much. Okay, then we have Harry. Do you foresee listing on a US exchange at some point in the future? Who knows? US market, it's very interesting for companies like ours. Multiples are very different from the ones we are having today, but let's see. We will see. Today, we just focus on growing the company. Thierry, can you please comment on the current competitive environment with Chinese vendors like Qualitative? Well, clearly, TELIT is you saw from our revenues, we have now more than 60% of our revenues in the US. So the competition with Chinese vendors in US is different from the competition in Europe, where there are less constraints, but also where the local administration is probably more open to Chinese investments. In the US, as you saw it also from our figures. We basically performed at the same level of last year in a year, 2020, that was a nightmare. I can really tell you it was a nightmare. So Qualitative is an excellent company. They compete with us, but we think that we are in areas where our products and our solutions are excellent for our clients. And we continue to win designs, we continue to grow, so we are very happy. We are very happy. In Europe, of course, but it's not Qualitative, it's many other Chinese players. We face their competition, and of course, like in any market, we know where we have to move in terms of product positioning and product management in order to differentiate us from low quality or low price offers. We don't get into the game of pricing. We don't get into that game. Nick, can you expand on how you are selling into your client the services offering and how you see these scaling up? Probably here there is a mistake. What is the speed of revenues you are targeting? Look, we target, of course, double-digit growth. How do we go to market? We did something interesting because we integrated our connectivity sales team together with our hardware sales team, so that we try on one side to take advantage of all the bundling opportunities that are many. And in fact, 2020 was excellent for growing these business opportunities. And at the same time, because we do believe that we need to transform also the culture of the organization, and putting together two sales teams, where of course the hardware team is much bigger and larger in terms of size, with these different scopes, also creates the culture within the company that it's a culture that has to move from a hardware-centric sales culture to a solution-based sales culture. With regards to platform, we have a separate team for the platform and distributors for the platform. We are focusing very much on IoT factory platform, where we are particularly successful. We are now, let's say, working with most of the if you take the ranking of the top automotive players in the US, we are working almost with all of them. And we do believe that this of course, will not be only focused on growing the platform as itself, but growing the platform as part of our offerings. And here I talk to you about the One Edge, the product we mentioned before, that I don't know how much is known to all of you, but basically, as we said before, One Edge that we launched last year, and of course we are at the first, let's say, version of the product, is an integrated module with our platform and our connectivity. So we transform our module in something smarter. Now, Mazin, can you comment on your current market share of industrial IoT and the competitive landscape? Well, it's very difficult to comment on market share IoT. You mean, Mazin, I guess you mean in general for hardware and for all the services, correct? And also the modules, correct? Because, when you talk about market share, it's quite complex to define all the areas. So this is, let's say, maybe, Mazin, you can talk to our people after the meeting and explain well in which areas you are interested to understand, even if you know that we don't provide any information about market share. But it will be interesting for you to discuss with us what we see. Rustam, given COVID-19 impacts on IoT segment, do you expect there to be pent-up demand in 2021, or will recovery be more gradual on a go-forward basis? Rustam, no, we are positive. We do see a ramp-up in demand. However, we have to say that, yes, there is a strong ramp-up in demand, but we don't have the visibility that allows us to understand whether this ramp-up is due to the fact that, knowing that there is a shortage on the semiconductor industry, our clients are pushing for, let's say, securing the orders for the whole year. So maybe you anticipate certain trends, or whether it is a growth that will continue throughout the year. But as per today, we are glad to say that all the actions that we have put in place are proving to be positive and to take good news to us. Eric, how has the pandemic affected your expectations for the timing of the global build-out of 5G networks? Look, in reality, not much, meaning that the 5G networks rollout will take time for sure, but we are glad to say that overall in Asia, which is important for us because Asia is the area where we suffered more in 2020, we do see already in 2021 clients, and we see already a ramp up in demand. Therefore, we are happy to say that our expectations regarding the 5G are positive. James, could you talk a bit more about the decline in sales in APAC and prospects? Yeah, James, I just mentioned we suffered. I didn't say why. In reality, we have a big client in Asia, and unfortunately, this big client was hardly hit by the pandemic. So he justifies most of the decline, I would say. And for what regards the prospects, thanks to 5G, thanks to our continued focus on 4G high cut, we do have positive prospects for the area. Then Roberto, can you give us an idea of the gross margin of the IoT connectivity business and tell us if it was positive at EBITDA in 2020? Roberto, I cannot give you gross margin figures, but I can tell you that the EBITDA, yes, it was positive. Daniel, I'm sorry, but I cannot answer on this. Roberto, can you explain the delta between stated and adjusted EBIT and stated and adjusted PBT in 2020? This is for our Eyal. Eyal?
Yeah, Paolo, which question again?
Roberto is asking, can you explain the delta between stated and adjusted EBIT and stated and adjusted PBT in 2020?
Yeah, so what we take out and or add back is between the EBIT and the EBITDA is mainly the capitalization that was reduced, and we add this back, and a few other adjusted amounts such as depreciation and amortization, and an impairment, a small impairment that we had this year. These were the main ones, and also exceptional expenses of around 1.1 that we detailed in the RNS.
Okay. I can't answer a couple of questions. Yeah, Eric, Roberto, there was also, how do you see current order backlog developing? And I think I already answered. Eric, so do you expect semiconductor component shortages to improve from current levels or get worse? It depends. You know, we have certain areas where we do believe that in the second half of the year, shortages will be very much reduced, and some others where the visibility still is low. In any way, what I can tell you is that I personally have every week, almost every day, calls, emergency call with all of our top key components partners, because we are in a situation that deserves this kind of focus. So in general, the trend should be better in the second half. Let's put it this way. Daniel, u-blox offered 53% at 2.5 a share price. When u-blox share value rose significantly, such a deal could have brought TELIT approximately $3 a price per share. Why did you refuse it, and why there is no in-depth examination on the matter? You know, I think that the board already clarified what was the position regarding this kind of offer. And this was an offer in shares. It was an offer in shares where basically at the beginning, yes, it was offered 53% to TELIT shareholders and 47% to u-blox shareholders. But this number was not fixed. In fact, in a second letter, it was a merger of equal. And when the shares of u-blox went up and up, the 2.5 continued to be there. Now, I guess that as investors, we don't have to look at figures like this, but we have to look at what? We have to look at how much a company is valued if you merge one company into another and you take shares. And if you look at the multiples of EBITDA and then the cash of TELIT and u-blox, this kind of offer was not reflected as an interesting offer. debate, I cannot talk about it. Seemingly, there is a close connection between the various entities. Again, I cannot comment on this. We have Rolf, I understand that you do not provide full year 21 quantitative guidance on sales. Why is this? And can you please share qualitative thoughts and elements that will influence 21 sales the most? Yes. Look, as we said, I can't say much more than that. We see today a ramp up in the orders. So we are happy that we see good orders, but the visibility, both on the client side and on the supply chain side, is not optimal. So I think that we can only say what I said at the very beginning of my presentation, which is that we are confident that we can deliver revenue growth and better financial performance in line with the expectations. So I go to James. Paolo, good job in difficult conditions, but how do you manage your times between your various roles? Serie A president. Thanks God that there is a good CEO at Serie A that is doing the job, an excellent CEO. So I am the president, and the president is like the president, unfortunately or fortunately, I would say in this case, with very little powers apart from representation. So my focus on TELIT is full, and I think that you see it from the results and from the discipline that we continue to dedicate to any effort that we put into transforming this company. Sorry, Amazing, but I cannot comment on the size of the order book. Ben, I have a poor connection, so if you already answered this, but the IoT cloud and connectivity growth, yes, this we already answered. Rustam, what are your current expectations for direction of R&D, sales and marketing expenditure moving forward as pandemic-related savings are neutralized? Look, I want to be very clear. R&D and sales and marketing, we spend what we think it's useful for value creation. So the way we are working is just trying to transform every day more this company into an efficient machine. So the savings this year were savings that were mainly on certain lines. You have seen it from Eyal presentation. In the R&D, we dedicate now all the efforts to certain products that we do believe, as I said before in our presentation, represent the future for TELIT. And on sales and marketing, marketing, of course, we were obliged to cut certain marketing expenses, but we didn't stop working on marketing. We found different ways and very effective ways, like, for example, webinars, the one we are in right now, for example, and webinars were very positive. We really held and continue to hold right now many webinars that were very interesting and important for us in terms of market presence. And then we are continuing to invest in people. We are continuing to invest into areas that we believe are critical for TELIT growth. Eric, when will your 5G data cards be generally available, and how rapidly can that product ramp up? Well, already in 2021, we will have sales, so they will be available and working. So thanks to everybody. I don't see any other questions. So
no, Paolo, you've done a fantastic job, and thank you so much for reading such an exhaustive list of questions. And I know there are a number that were duplicated, and thank you also to investors for submitting those questions. Also, good timing, Paolo. Looks like we're just coming up to the hour anyway. I know that investor feedback is important to you. Perhaps I could ask you just for a few closing comments, and then what I'll look to do is redirect investors to provide you feedback.
Thank you.
So I could just hand back to you for a few closing remarks, and then I will divert investors.
Sorry, I couldn't hear you in the last sentence. What did you say?
Oh, Paolo, just saying, just obviously to wrap up, to close the session, if you want to have a few closing comments, and then I'll redivert investors to feedback. Thank you, sir.
Thank you very much. So thanks to all of you. Thanks for your time, and thanks for being interested in TELIT or being shareholders of TELIT. Thanks for all your support. I'm sorry that today I couldn't elaborate on the very recent happenings regarding debate, but as you know, you are on the market and you know what are our restrictions. For the rest, we can assure you that we are working really every day, 24 hours, 7 days a week in order to transform this company, and we want to be the leaders in this industry. So we will push the accelerator even more.
Paolo, Eyal, thank you very much indeed for updating investors today and for such an exhaustive Q&A session. Could I please ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, the feedback page will appear. If you access this meeting via the link sent to you by email, you will be asked simply to log back in to submit your feedback, but it would be very useful for you to give your views and expectations to the company. On behalf of Paolo, Eyal, and the management team at TELIT Communications PLC, would like to thank you very much for attending today's presentation. That now concludes today's session. Good afternoon to you all, and thanks for your time.
Thanks to all of you. Bye-bye.
Thank you very much.